to talk to you about the landscape of the American consumer, even more broadly than just the American financial industry. And to set the stage, I want to recast what's happened in the last 10 to 15 years in the United States, because it creates a different environment for the consumer than I think that which exists in other parts of the world, including in this region. First, not that we need a reminder, but the great financial crisis emanated from the American financial system. And 2 out of 3 Americans either know someone directly or know someone who knows someone who lost their home to the bank in foreclosure. 2 out of 3. And so that sets the stage for where we are today, which is of the 10 most disliked brands in the United States, 4 of them are the 4 largest banks. And so as we understand what technology-led disruption means for the financial industry, we have to start by understanding how American consumers feel about financial institutions. It might change by the week, but at least last night, people hated their banks more than they hate the members of Congress. It's a rivalry, and both institutions are doing their best to compete. Now, starting from that situation where 92% of American consumers don't just dislike but distrust their bank, you have to consider why that distrust exists. Some people in Silicon Valley believe that that distrust exists because the technology of the banks or the features of the banks aren't cool enough and fast enough. And if that's your diagnosis of why more than 9 out of 10 Americans dislike, distrust, and in many cases use the word hate their bank, then that takes you down this path of how you build a company. But our diagnosis at Aspiration is that people dislike, distrust, and hate their bank, not because the features and technology aren't cool and fast enough, but because they fundamentally have an experience with their bank where the worse you do, the better your bank does. The lower your balances, the more fees your bank earns. At the times you're most vulnerable, the more your bank sticks it to you. And if, as we do, you believe that that's the reason that people don't trust their bank, it takes you down a totally different path of what kind of company to build. The second part of understanding the American consumer right now that isn't obviously relatable to the financial industry, but I'm going to describe how we're making it relevant, is that more and more American consumers want to do everything they can with every part of their life to reflect their values. And there's a lot of reasons that have awakened this. Some people might not agree with it, but it's definitely a reality that describes how especially millennial consumers are behaving, that they're looking to match their values and their money. So, big picture, you have over 9 out of 10 people who don't like their bank. And then within that 9 out of 10, you have another half that feels like their bank uses their money to violate their values. You probably see this often on TV of all the activism among millennials in the United States, activism around fighting the climate crisis, activism around fighting the epidemic of gun violence that we have in America, fighting the epidemic of institutionalized racism in many of our industries. And what a lot of American consumers are waking up to is that their money that they put at the bank is what their bank used to make loans. And so if in your personal life you have these certain set of beliefs, but then you learn that your bank uses your money to violate your values, it's a real awakening. And as a matter of statistics, we did significant surveying around the country. We found that 61% of people in the United States said that they knew that their bank used their money to make loans to fossil fuel companies, prison companies, or gun companies. They'd want to leave their bank right now. But only 17% of those people know that, in fact, that's how their bank uses their money. So with that backdrop, we've built Aspiration to solve 2 problems. To solve the problem of financial misalignment and to solve the problem of values misalignment. The way we solve the financial misalignment is through a unique business model that we call pay what's fair. So rather than what people expect from their bank, and that is a relationship where the worse they do, the better their bank does, We create a relationship where the only fees that customers pay aspiration, the only fees, are the voluntary fees they choose to pay. Literally, we've built banking services on tips. Now, you know, that can't possibly work. And indeed, that's exactly what so many people said early on. But the first person who really believed in us was Jeff Skoll. Now, Jeff, as you might know, is the founding president of eBay. And when we presented the pay what's fair model to him, he said, yeah, that'll definitely work. That, in his mind, was this continuation of a revolution towards more trust that actually began with eBay. You know, we take it for granted now, but at the time eBay was really rising, it rose among a backdrop of a bunch of other companies that made you put your goods into escrow before you can finish the transaction. And what eBay said was, you know, forget the escrow part, we're going to just trust buyer and seller to do right by the other. And at the time, it seemed like a preposterous risk, but obviously we know how that worked out. And so that was about 5 years ago when we first took Jeff's money. And now we raised about $100 million of outside capital and have hit just about 1 million customers. And out of those 1 million customers, over 90% voluntarily pay. Because humans, in our experience, will do right by you if you do right by them. But in the financial industry, the boundaries have been pushed in that direction. The way we solve the values misalignment is we've created something called the aspiration impact measurement. The aspiration impact measurement is an algorithm that shows you how the places where you spend money affect workers, customers, and the environment. That every day in America, people spend $36 billion, and you have tens of millions of people that want to do more to make the world better around them. They look to voting as the typical way to do that, but they realize you only vote every 2 years, sometimes a little more often. Every day, though, you're spending $36 billion. And if you direct those monies towards places that treat their workers, customers, and the environment better, you can create change several times a day. And so the way the aspiration impact measurement works is when you use your aspiration card at a merchant, in the app, you'll see a people score and a planet score, each between 0 and 100, that aspiration assigns to that merchant for how it treats the environment, which is its planet score, and how it treats its customers and workers, which is its people score. Then you can click on a tab and view similar businesses and see how those other businesses treat their workers, customers, and the environment. Here's why that's significant. The great companies that you saw on the slide earlier in the introductory presentation did what I call unlock latent demand. As investors, oftentimes you examine the size of the market as it presently exists. And the way that exercise would work, obviously, in the financial industry is you look at the financial industry in the United States, you see the largest sector of the American economy, and you'd say, well, digital-first banks could shift some share of that towards them. But what if instead you looked at it and said, we're going to get people to see utility and uses of their money that they didn't ever think about before. And in doing so, create demand that never before existed. That's what Aspiration does with its customers. Our customers are getting banking services from Aspiration. But the core of what Aspiration delivers, and the reason that Aspiration has grown so much faster with such high retention, is because our customers are actually coming to us for new ways to have impact in their daily lives. And we're delivering those tools to have more impact through non-discretionary services like a banking account that they have to have, but strongly dislike in their present delivery mechanisms from the incumbents. Now, over the next year or two or more, you'll hear from a lot of different quote-unquote neobanks, digital banks, whatever you want to call it. And I think what you're going to find is they're all basically taking banking and putting it mobile first and online with cheaper costs and faster technology. And that's going to definitely reach a certain number of people. But where the magic really occurs in unlocking latent demand is through more sophisticated customer segmentation. People always ask me, well, what does the aspiration customer look like? Because investors these days usually segment customers based on their age, their gender, their geography. But my message to you as investors is think more about the psychographic segmentation. So let me tell you about the aspiration consumer. Half of our customers are women. Our customers live everywhere. People think that the aspiration customer with our focus on social conscience might live in Los Angeles or the Bay Area, or New York, or Portland, right? But 92% of our customers live outside Los Angeles, the Bay Area, and New York. Our customers have incomes across the spectrum. A quarter of our customers earn over $150,000 a year, and a quarter of our customers earn under $40,000 a year. Our customers are younger, but a third of our customers are over 45. The reason is we're reaching people who are making decisions based on their social values. And people who make decisions based on their social values are young, old, men, women, live all over, earn a lot, earn a little. The other reason this approach is so significant is, in my view, you cannot sustainably disrupt incumbents that have infinite capital based on price. You know, my favorite business book that I ever read was Sun Tzu, Art of War. Okay. And one of the lessons of Sun Tzu is you have to disrupt in directions where your competitors are weak, not strong. And so think about what is right now the prevailing disruptive factors of the digital and neobanks in Europe, and in some cases, some of our peers in the United States. It's primarily based on offering things more cheaply. In some cases, offering things for free. But, for example, if the way to get customers is to give them free trading, then ultimately the incumbents that literally have infinite capital will pay customers to trade. If the way to get valuable customers is to give free bank accounts, then ultimately the incumbents will pay you to have a bank account. Which is why our approach is so critically different. Where we're disrupting is not that aspiration is lower cost, it's that it's better values. And that is exactly where the incumbents in the United States are weakest. So, you know, I'm threading here towards a conclusion with some insights about my perspective as an entrepreneur that I hope can be helpful to you as investors. And the most significant insight that we've activated in building aspiration is you have to anticipate that the incumbents are going to respond. And if your disruptive approach can't weather the strengths of the incumbent's response, then you might raise some good financings at high prices, but that's not the objective for even investors in the business, because you don't make money until there's an exit. And the reason why I think already and in the coming years, you're going to see aspiration both growing the fastest but most sustainably is because we have an approach that's hardest for the incumbents to copy. As you survey the landscape of the United States of socially responsible and conscious consumers, there's literally not an amount of money that Wells Fargo or Bank of America or Chase could spend to rebrand themselves as socially conscious. And that's exactly the point, is we've taken the incumbent strengths, which is their infinite capital, and turned it into a weakness by building a company that's focused on emotional and social values factors that people usually don't expect from banks. And for that reason, we've become the most beloved financial company in America. Thanks for having me this morning. Look forward to talking to you.